Hey traders, Robert H here. Lately I've been talking about finding strategies and patterns that best suit your personality. So you start from within. You figure out, what am I good at? What are my strengths, right? What are my weaknesses? What am I terrible at? And then you go from there. You try different things. You try different strategies that are in alignment with your traits and your qualities. And along the journey, you're going to fail miserably. You're going to get good at one thing. Maybe it'll work sometimes, then it'll fail again. You'll give up on it. Maybe you'll come back to it. Through trial and error, you're going to figure out what are you actually good at. You're going to carve that niche and specialize in it. But for some of us out there, we're just going to have to face the fact that we can't trade the open. I know that's very sad. The open's very glamorous. It's very glitzy. It's very sexy. Adrenaline rush, right? It's very volatile. People are done their day in 5 minutes, 10 minutes, big moves, dollar moves, high fives, going golfing. It's all great, right? But for a lot of beginners, guys, trying to trade at the open can only lead to disaster. Right? Sometimes you'll catch a move, sometimes you'll get chopped up, sometimes you'll dig yourself into such a deep hole you're trading for the rest of the day, and that's where a lot of the destruction comes from. So enough about that, right? When the market is very volatile, and this is actually represented quite well where we are right now in the beginning of May. The market topped out May 1st. The VIX actually hit a level of 22 or something like that. So the opens are very volatile. People don't know what's going to happen. So today I'm going to give you guys some practical advice, right? Not just tell you to go find some strategies, send you off on your way, right? I'm going to give you a real strategy and pattern that happens every single day. We see it on the stocks in play, stocks on our watch list, and all you need to do is sit on your hands until the confirmation appears, right? So what am I talking about today? I'm talking about pennants or triangles, right? Or wedges, whatever you want to call them. There's 3 types. There's this one. This is the even triangle. It's rather neutral. Basically, the price bounces around inside of this channel, and then it gets to a point, and either whichever way it breaks out is usually the way it breaks out. I find that this is not as good as the other 2 I'm going to talk about. The next is an ascending wedge. An ascending wedge is where the price keeps topping out at the same level, but each time it comes down, it gets bought up at a higher and higher price until it breaks out, right? So here, what's the psychology behind this? Well, there's some sort of ceiling here where everyone's selling. This is where everyone wants to get out. But on the way down, people are stepping in to buy at higher and higher prices, right? The buyers are absorbing the sellers to a point where there's no sellers left here, right? And then off we go. And then you have the descending wedge. This is basically the opposite. You bounce around inside this triangle, right? Each time it gets sold at a lower and lower level, or vice versa. The buyers are stepping in at a lower and lower level until there's no buyers left, and then down you go. So that's, this in theory, this all works great. If you watch Daniel Thomas in a member of our chat room here, he plays these formations. The theory is that these will repeat themselves, right? In some shape or form, they will repeat themselves at least once, right? At least in this height here that you see. And the breakout usually happens in the final third of the triangle if you divide the triangle into 3, right? So in this final third, you're going to see the breakout. Sometimes it'll break out, come back to test the top of the triangle. You'll see that. It'll be test the top, and then it'll go. But some key points here. These triangles depend on your ability to draw trend lines. So maybe I'll do a separate video on that, but it's very basic. Basically, you want 3 points to touch. To test the level. 3 touches is the minimum. The more touches, the better. Watch out for false breakouts, and you want to understand that the lines are an area, not exact points, because sometimes the price will breach it, it'll wick through it, and we're going to see some of that today. So to prove my point, I'm going to make a very long video today. I'm going to find 1 stock per day this month. It's May 16th, and we've had, I don't even know how many trading days here, 14 trading days, or whatever that may be. I'm going to find one every single day for stocks that we watched, that we traded, guys. And this happened. All you need to do was wait. Okay, so first one is Uber. Uber. What had happened here? Well, we had this trend line on the bottom. We had this top being formed, this area, right? See how many times it tested, right? Arguably 1, 2, 3. And then each time the buyers kept stepping in at higher and higher levels, right? We coiled around inside of here until we got to this point. And then what happened? We broke out. Simple, right? You put your stop below the low before it breaks out, and then you ride the breakout, right? Look at the volume come in. Other people are playing this strategy. Look at the time of day, 10:30, guys. If you had been watching this chart earlier, you'd say, oh, Uber's doing nothing, it's chopped, it's garbage, it's coiling around the view app. It is doing that because it's indecision. Nobody has taken control, right? The buyers and the sellers are absorbing each other at the extremities, at the outlines of these triangles. And another thing to keep in mind is that the patterns that we typically play, A, B, C, Ds and stuff like that, they happen inside these triangles, right? They happen inside of here. So depending on your time frame, if you're in here, you can play these moves. You can play these smaller moves. But if, as I said before, if your personality is not well geared to quick decision making and looking at candle by candle, individual moving averages happening inside of here, take a step back, guys. Take a step back and zoom out and look at these formations. Beautiful move, beautiful breakout, right? That was Uber today. Nvidia did something similar today, right? Brian called this. He called this in the chat room. It's a pennant, right? Look at this test. This test at the top. This bottom line coming in. One test, 2, 3. Bottom, 1, 2, 3. Each time is higher and higher and higher. You get to the point, the final third of the triangle, right? We broke out. We broke out. And then we came back to test. It held, right? This used to be resistance. It held as support. And off we went, right? Into the sunset, guys. What did this happen? 1040. Anyone trading this before? Oh, untradeable. Chop. Okay, so that's today. Actually, there's even one more today. Let's go to QCOM. QCOM today. Let's just erase this original line I had here. I was actually going to take this. QCOM. So we got, a lot of us did get chopped out, right? In the beginning. Look at this. This was the even triangle, right? The isosceles triangle. Could it went either way, but when it lost that, 1 test, 2 tests, 3 tests, what do you think happened? Collapsed, right? And another thing to keep in mind here is that these strategies, look at the volume as well, right? I may forget to mention this throughout the video because it'll be a very long video, but just look at the volume. People are waiting for this breakdown. However, people who aren't even considering triangles, right? People who don't even look at these things, they play this as well. This is a loss of the VWAP. So you put it in conjunction, right? Loss of the VWAP with this loss of this triangle. I bet you if I looked on a 15-minute chart, it's probably a bear flag, I'm guessing, right? Based on this, it's probably a bear flag. And then off you go, right? So that's 3 different things that 3 groups of traders are looking at separately, and that confirms with volume, right? More eyes, the better. So that was QCOM. Next one is A on May 15th. This thing was a gap down, if I remember correctly. The open was very volatile. It didn't want to leave the VWAP, right? Just coiling around until it lost the triangle. I remember this was a 5-minute bear flag, and then it was gone on increasing volume, right? That's what you want to see on this descending wedge type of formation. On the top, each time, people were selling and selling at lower and lower prices to the point where the buyers couldn't absorb the sellers anymore, selling pressure too strong, and off we go downwards. May 14th, Roku. As you can see, we formed this isosceles triangle, narrowing to a point. 1, 2, 3, 1, 2, 3. Volume comes in, breakout to the upside, and you're gone, right? This happened to be also a little flag of some sort above the VWAP. So guys, same thing over and over. This one is a beauty. May 13th, Teva. You guys remember trading this. It was in play. As you can see, the first 30 minutes to an hour, just coiling around. It was losing the VWAP, but it didn't want to break out. It wasn't until it lost this flat bottom, and then we were gone, right? So each time it came up to test the top upper trend line here, the buyers were stepping in at lower and lower prices to the point where the sellers' selling pressure was too much, no buyers to absorb it, and we sold off. You got to watch out for these things here. These are false breakouts. These happen, guys. I'm not cherry picking these examples here, right? So how can you avoid the false breakouts? Well, you got to look at where we are inside the triangle. The latter third is where you want to take this. This is a little bit early in terms of the breakout point. Apple, May 10th. This is Norm's favorite, right? So we kind of coil around at the open here, creating this descending wedge inside of here. We're stuck, and then we kind of narrow to this point, loses the triangle, loses the VWAP, and gone. Volume comes in. JD, May 9th. As you can see, we just coiled around inside of here. Each time kept getting bought up in higher and higher prices. Here, here, here. This was a little bit of a weird area, but whatever, we get to the point. We break out on increasing volume at 1045. Nice move. This is actually a considerable move for JD. That's about 50 cents, which is pretty big for this low ATR stock. Here's Apple again on May 8th. It's a narrowing point on a pennant. Could go either way. 1 test, 2 tests, 3 test area. 1, 2, 3. Gets to the point, breaks out to the upside at the top, and off we go. Here's the volume picking up again. This one's a really good example. So AIG, it was supposed to be in play. This thing was on earnings, right? But the open was just untradeable. A lot of us got chopped up in this. I believe Andrew did as well, right? There's just no direction. So if you took a step back and realize, okay, this is chop, right? This is chop. We don't know which way it's going to go. Let's just try to figure out this trend line here. What's it going to do? Well, we're narrowing into a point, right? We're stuck inside of this. One test, two-ish, three-ish area. There, kind of here. Get to the point, we lose the triangle. Volume comes in, flush. That's the move you want to see. You want to stay away from this. Stay away from this, guys. Same day, MU. This thing was untradeable at the open, right? It was just chop. Chop. But as you can see, descending wedge, right? Buyer stepping in at lower and lower prices. This bottom's holding, testing 2, 3, 4 times. Then we lose the VWAP, we lose the triangle, and plump, 40-cent drop. This one's interesting, JD May 6th. So this one took a long time to pan out, right? This is 11:30 before the breakout point, but it's the same situation here. So you kind of ignore the open just because it's so violent, but we coil around, we're inside this channel, inside the channel, but again, each low is higher and higher and higher until we get to this point. We break out over these highs, right? Kind of the high of the day area, we break out, and off we go, right? Another 30-cent move on JD, big move. SQ May 3rd, same situation here, right? We tested this area once, 2, 3 times. This side we're coming up, higher lows, breakout, reach the point, break out with the volume surge, pop, and off we go. QCOM May 2nd. So this one you can play one of two ways. You can either play it as a flat top, ascending wedge like this, wait for the breakout here, or you get the earlier entry if you play it like this, better drawing it like this, as the pennant, as the even-sided triangle, and then the breakout point is here, which actually happens to be a bull flag as well. So many ways to play it, and that's why the volume came in, right, in this area. People saw different things, which actually turned out to be the same thing. It was a breakout above this, and off we went. CVS May 1st. This one is personal because I actually got chopped around here. I took it 2 or 3 times, but basically, same situation here, right? Each time it came up, kept getting sold at this point, right? But the buyers were stepping in higher and higher. And then we just took off on this ABCD pattern. See how this ABCD happened inside of the triangle, right? So more eyes, look at the volume surge. That is massive. That's actually the second biggest bar of the day. If you exclude the first candle, it's the biggest bar of the day. Many eyes on this formation, guys. That's what you want to see, right? The coiling around inside, higher and higher and higher. Breakout. Finally, NXPI. I actually took this trade. I was trying the strategy out for the first time, and then I chickened out. I think I shorted it here, came back to test. That's what you want to see, right? If it comes back to test the outside of the triangle, it should reject it, and then we lost it. But I was already out. I got out at break even, I think somewhere here, right before it broke down. But same situation, right? It's descending wedge. This area at the bottom's holding. The buyers are holding it until they fail. Selling pressure is just too much, and then we collapsed. So that concludes all the examples. I didn't have to look very hard. You guys should recognize these symbols. We traded these all month, right? And the volatility really picked up in May, so this is a really good example, guys. The opens have been very choppy. The first 30 minutes, 1 hour, there's really no direction, right? So identify if something's chop. That's step 1. Once you've identified that it's chop, stay away from it. Figure out, is it range bound, right? Is it forming a triangle, or is it just stuck in a channel? So we've seen that before, just stuck inside of a channel around the VWAP. Or is it actually a discernible triangle, right? Where the lows are getting higher and higher. And we're consolidating to a point. Are we going to break out? Look at the time of the day. 10 o'clock at the earliest. 10:30 is more like it, right? It's usually the prime time. 11, sometimes 11:30 at the latest. So these are later in the day plays. Don't rush it. Don't force it. And adjust the trend lines as the candlesticks are forming the pattern. Sometimes it will look like it's making a triangle, and then it'll just fall apart. So you really have to adjust the trend lines, tighten it up for best fit, look for 3 tests on the bottom, 3 tests on the top, and good luck with that, right? If this is a strategy you want to start trading, please research it, do your homework, and let the rest of the community know, guys. Share your knowledge. I'm pretty sure one of you out there will become a master and expert at this, and you can become the resident triangle expert. All right, hope this video has been helpful. Thank you for watching. If you like it, thumbs up. If you don't, thumbs down. If you hate it, write me a hate mail. Make sure to address it to my correct email, robert@bearbultraders.com, and don't use any swear words or we'll end up in the junk mail. Thank you.